Okay. D was practicing CA in Kolkata for last 15 years. He was appointed as the auditor of Giant Motors Limited, the listed entity, which was involved in the business of manufacturing of motor cars for 31. D was appointed as joint auditor along with T and P, right? So SA 299. They have divided the responsibility for conducting the audit in accordance with 299. As the company has huge amount of PPE, it was decided that all three auditors will verify the records relating to PPE. While forming an opinion, D was having a different opinion on PPE, but T and P were having the same opinion. So differences of opinion. D wants to qualify the capitalization of post-acquisition costs incurred on machinery, whereas T and P were of the opinion that treatment done by Giant Motor is correct. Both of them contended that they are forming the majority. CAD will have to certify the common audit report, which is in accordance with the opinion of T and P. No differences of opinion. The auditor having a different opinion may report separately, not bound by the rules of the majority of the joint auditors. While assessing the applicability of CARO, D found that the capital of Giant Motors Limited is 500 crore, along with the paid 30 crore of the calls which are being unpaid as they are receivable from the retail investors. In the month of July 30, Giant Motors Limited forfeited shares of worth 10 crore, and there were no reserves in surplus as it was transferred to the parent entity. And also, along with equity shares of 300 crore, there was a preference share capital of 200 crore. CAT, while reporting under clause 6 of the CARO cost records, did not report anything under clause 6 of CARO as the government had not ordered Giant Motors Limited to conduct a cost audit for its books of account. Now, clause 6 is regarding cost records. It is not regarding the cost audit. Hence, CAT did not report anything under clause 6. Okay. Can you please guide? Yes, can you please guide whether CAT really needs to go with the opinion formed by CAT or not? CAD will have to go with the opinion formed by majority auditor. No. CAD can add a separate audit opinion paragraph in the common audit report, and the same should be highlighted in emphasis of matter. CAD can go with the opinion formed by majority, and D had a difference of opinion should be highlighted in emphasis of matter. CAD can all together issue a separate audit report, and reference of the other audit report issued by the majority auditors should be made in the emphasis of matter or other matter. Right? They should make a reference to each other's report in the other matter or the emphasis of okay. What should have been CAD's opinion on the applicability of CARO for 3031, assuming forfeited shares are not included in the share capital? Right, so now paid up share capital, does it include equity preference both? Yes, it includes both the equity as well as the preference share capital, but it will not include the unpaid shares, but forfeited shares, those are to be added back, right? So that is 500 minus 30 plus 10, right? So that comes to 480 crore, right? 480 crore. And now what does it say? 480 crore, which is more than the 1 crore, right? So we have 1 crore, 1 crore, and the 10 crore, right? So it is 480 crore. And was the approach followed by CAT for not reporting under 6 of CARO correct? Yes, as the reporting under said clause is required only if joint auditors were ordered by the government to conduct a cost audit. No. Yes, reporting under this clause is applicable to entities involved in the production of electricity. Right? No, clause 6 should be reported irrespective of whether Giant Motors has been ordered to conduct a cost audit by the central government or not. No should be reported only if there is a discrepancy found while examining the cost records. No should be reported irrespective of whether Giant Motors has been ordered to conduct the cost audit, because clause 6 requires the reporting on cost records and not on the cost audit. Okay.